Market rotation. I mentioned this concept in my market update this morning, so I thought it might be helpful to talk about what it actually is and why it happens. So I like to think of market rotation like this. Imagine the stock market as a big house party with different sectors represented by different rooms. For example, tech stocks could be represented by the basement with all the toys and video games. Big banks, they could be represented by that one bedroom where all of the coats and jackets inevitably end up on the bed. And consumer staples could be represented by the kitchen. A market rotation happens when investors start leaving one room, one sector, and start congregating in another room, another sector. It doesn't mean that the party's over or that the market's crashing. It's just about people changing rooms or sectors based on their preferences, beliefs, and what they want to do. Now, why does this happen? Usually it's because investors see changing economic conditions. If growth looks strong, they rotate into cyclical stocks. Cyclical stocks are companies that do well when the economy is booming, like airlines, automakers, and retailers. These are like the beautiful backyard at our party. It is wonderful when the weather's nice, but not where you want to be when it's raining. Now, on the other hand, when uncertainty rises, if there are recession fears or market volatility, investors will rotate into defensive stocks. Defensive stocks are companies that sell things people need no matter what, like utilities, healthcare, and consumer staples. They are these sturdy, less sexy rooms at the party, like the bathroom or the kitchen. So here is a real-world example of market rotation. In late 2023, when interest rates were really high and recession fears grew, investors rotated out of tech and into defensive sectors like healthcare and consumer staples. But when inflation cooled and rate cut expectations rose in early 2024, money flowed back into cyclical areas like tech, industrials, and financials. That's market rotation in action. It's just investors adjusting their bets based on what they think is coming next. It's a signal of shifting confidence and risk appetite. Understanding this helps you see not just what's moving, but why it's moving.